Let's give you that markets update. The rand breaching the psychological level of 19 rand to the dollar yesterday, reflecting a broader market anxiety about the direction of the United States interest rates environment. Bianca Botes is Executive Director at Citadel Global, joining us now for a quick look of the market developments. Bianca, good morning to you. Let's begin with that 19 rand to the dollar mark again. That's where we are. Talk us through this trajectory over the week and the outlook for the reset, perhaps in July, based on data that is still to come.
Good morning to you and the viewers at home. As you mentioned, the rand is also out in the cold today, breaching that critical 90 rand mark. And that is mainly attributed to the fact that markets now anticipate a high probability of further rate hikes by the Fed. You'll recall that initially we expected the Fed to follow through on their pause that we saw in June. But now markets are pricing in close to a 90% chance for a 25 basis point hike in July, followed by another 25 basis point hike towards the end of the year, which would likely be August or September. And we'll actually only see a peak in interest rates following those two interest rate hikes, and a probability of a decrease in interest rates probably only towards the latter part of this year or early next year. So that's really dampening risk sentiment at the moment, and we are seeing emerging market assets such as the South African rand come under pressure.
Let's talk commodities. Oil prices rising slightly this morning and on track for its second straight weekly gain. What's driving sentiment there, Bianca, and what can we expect from fuel prices based on these trends?
We have seen crude futures remain close to about the $72 per barrel mark, and that's after it surged 3% in the previous session. The strong performance was supported by supply cuts implemented by all major oil producers and a significant decrease in U.S. crude stockpiles. We can expect OPEC to do what is needed to continue protecting the oil price from a free fall due to a decrease in demand on the back of this global growth slowdown. And also underscoring the oil price at the moment, interestingly, as well, China is still underperforming in terms of economic growth, and that is dampening oil demand. There are prospects of stimulus coming from the Chinese government, and that's underscoring oil prices at the moment as well. Should we see a weakening rand as well as an increase in oil prices, we can expect some pressure on fuel prices in South Africa, meaning that they could see another rise. However, should we see that the rand actually makes a bit of a U-turn back to below the 19 rand mark, it actually eliminates some of that risk.
Let's talk about South Africa's foreign exchange reserves for the month of June. That data is out. In May, we saw a decrease. Help us make sense of that data.
So I think it's firstly important to understand exactly what foreign reserves are and why we hold them. So foreign reserves are typically held by our Reserve Bank to service South African foreign exchange liabilities, such as our foreign denominated debt, maintain confidence in South African monetary and financial stability, and also to protect the economy against the events of external shocks. So when we actually start seeing a fluctuation in these levels, there are a multitude of factors that contribute to why our FX reserves actually fluctuate. When we look at a decrease in Forex reserves, typically, the cause that comes to mind is capital outflows out of South Africa. And when we start looking at the backdrop that we are seeing, so firstly, a risk-off environment globally, we are seeing some uncertainty in terms of economic growth in South Africa, but we've also had that recent bout of geopolitical fallout. That all leads to capital outflow out of South Africa, and that would put downward pressure on our Forex reserves.
Conclude with the conversation around the Reserve Bank's inflation expectation. The June month reading expected to be within the target band, but the SARB wants it anchored at around the 4.5% target range. Talk us through those developments. Does this match the United States Fed's comments?
Yes, I think once we start looking at inflation in a global fashion, we actually notice that there is a decrease in inflation globally, and South Africa is not excluded from that, with the governor pointing out that we will likely return to that 3 to 6% band in June. However, what we need to bear in mind, just because we enter the realm of that band again, doesn't mean that the SARB is actually done with hiking interest rates. When we look at the Fed, they are targeting a 2% interest rate. And in South Africa, they normally talk about the mid-range for that band, which is closer to 4.5%. So we can anticipate that interest rates will continue to be hiked as long as we are not anchored at those specific levels. And it is extremely data dependent. The states, for instance, they are looking to see a contraction in economic growth, as well as an easing of the labor market that remains very resilient at this stage. And in South Africa, they would like to see inflation sit at that 4.5% for a couple of consecutive months in order to say it's anchored there and we have now reached our target in terms of interest rates, and we can now start looking at adjusting them downward without having a negative impact on inflation.
Bianca Botes, let me thank you very much for that markets update. She is Executive Director at Citadel Global.